Hello and welcome to another episode of Xpandables with Fibonacci X. Xpandable is a series of conversations with operators and investors where we try to demystify the building pillars of venture building. Today we have Vishal with us from OneStack, and OneStack is solving an interesting problem for Bharat and something I think folks living in tier 1 may not be able to relate. Going to a rural bank is a very different story. As a kid, I grew up in Western UP. I'm a first generation college graduate.
Wow.
And my family is into farming, right? So a lot of our initial bank accounts were, let's say, in Vidu Grameen Bank, Prathama and all these. So I have been to those banks.
Okay.
And still we have branches in those districts in Western UP where we see regional rural banks, right? So interesting, and that's why I wanted to speak to you, because Bharat is a theme for us, and we always get excited to speak to founders who are solving something fundamental for tier 2 and beyond, because our pyramid is that at the base there are a lot of issues in India which needs to be fixed. And the overall consumer story of India, which is sold by investors to the global community, actually that is one of the major anchors, is that the demand at the bottom of the pyramid will get unlocked in the coming decade or so. I mean, that has been the story for last 20 years, right? Even when I was on the advisory side, I would always see investors pitching that to LPs, that this is the scope. So tell us about OneStack. Instead of me introducing, why don't you tell us what is OneStack building?
Yeah. So, as you rightly said, right? So we typically ask people, tell us how many banks you think are there in India, right? And the first typical answer we get is, maybe 40, maybe 50, because as we call the top 1% of Indians of this country, what we see is we might have 20-30 PSU banks, right, maybe 20-30 private banks, and some maybe 40 odd foreign banks. That's what we primarily are aware of. What we don't realize, as you said, right, if you go beyond metros, actually there are 2,000 plus cooperative banks. And then there is this layer of 1 lakh plus cooperative credit societies who are the financial engine of this country. This particular cooperative society and banks is about 11% of financial health of the country. So they take care of, at overall level, balance sheet is about 2,40,000 crores. And these typically have, 11% of that comes from that place. Now, from what has happened over the last 10 years in India is a huge conversion of economy from cash economy, unorganized economy to digital economy. 2016 when UPI was launched, Aadhaar was already there, and then the payment stack in 2016 itself and after COVID just boomed, right? Today we do about 20 billion transactions through UPI. But what has happened is, if you look at even NPCI stacks, that concentration is still with the top 10% of Indians. So as per a study, actually, if you take the top 10%, 80% of those Indians say our primarily go-to payment method today is UPI. But as soon as you go to the next level, it becomes 30%. So that's the digital gap we are talking about. So while private sector banking came in this country in early 2000s and brought a lot of technology, mobile app came, digital banking came in this market. So, but it kind of didn't percolate down so fast because private banks were obviously slow to grow and they were only catering to the top 1, top 2 HNIs and those kind of people, right? So it didn't kind of cater down. So basically, but then what happened is 2016 Jio came in play, UPI came in play, and suddenly mobile banking kind of grew very, very quickly. Today, to give you some stats, today we have 1 billion internet subscribers in this country. Mm-hmm. But we have only 30 crore UPI users in this country, right? So that's just 30%, right? Then we have 35 crore digital banking users in this country. Now, out of that 35 crores, more than 50% is with fintechs, not with banks.
Right.
Right. So that's the length and breadth we are talking about when we say out of 1 billion internet smartphone users, only 30% are currently using financial services on mobile. Of that, only 50% are actually using a banking app.
Right.
Right. So that's the gap. That's the overall market gap. But if you go a level down where we work, cooperative banks, and with those 40 crore Indians, it's even worse. Right? While all of these guys today have a smartphone, the biggest penetration of social media, WhatsApp, e-commerce is with tier 1 to tier 2 rural guys. But as soon as you go for financial transaction, it's much, much lower. Right? The penetration has been much, much lower. Why? Because the private sector, public sector banks has not reached that level. Right? They have not gone beyond tier 1. And the second is, none of these cooperative banks have become digitized. Right? Even digital banking from a PSU perspective has happened very recently.
Right.
And what we are basically solving is, we are trying to now figure out how to digitize this segment. So how to digitize the next 50 crore, 40, 50 crore Indians and get them confidence to use mobile phone for their financial transactions as we kind of digitize them and get them into the formal economy of this country.
Correct. So PSU, I clearly remember, right, around 2003-4 major shift happened, right, in terms of NEFT and all these systems came into
CBS
play,
came into play, yeah.
right? If we take a step back and think about the role these credit societies and cooperative banks play, right, clearly in terms of access to, let's say, input side of agriculture, let's say, fertilizers on credit, you get subsidies and other things through these societies and cooperative banks. How much impact does it have? Do you think will it have once these are digitized?
So, see, simple way of looking at it is that today 95% of cooperative banks, so 0% of cooperative credit societies are linked with NPCI. So they don't even provide a UPI facility.
Okay.
That is number one. From a cooperative bank perspective also, so all cooperative banks has a RBI license for banking, but only 5% to 7% of them are actually linked with NPCI. What does that mean? That they cannot provide UPI facility to their customers. As basic as that. Right. So then what happens as you go to the merchants, which we always talk about in India, there are about figure go from 65 crores to 70 crore merchants. And if you look at that, majority of those small MSME and SMEs actually bank with cooperatives today. And if they don't give them UPI facility.
Okay.
So what happened in the last 10 years is a lot of fintech started giving them UPI facilities because customer like you and me wanted to pay them through UPI, right?
Correct.
So if you go down and you go to a chai wala, you want to pay through UPI now. You don't want to carry cash. Now that guy is a cooperative bank customer. Now the bank didn't give him UPI, but his customer wants to pay him UPI. So what he did, a Paytm guy actually came to him and said, here is a QR code, here is a sound box. Start accepting UPI. But at the back, what happened is he opened an account for him in a private sector account. Whosoever was the partner account, either it a Paytm payment account or any other bank account, right? But it's a checking account. His primary account remained with Cooperative. So when he started accepting money in that checking account, he couldn't save because it's just a checking account. He couldn't pay his loan through that. So he started using that money to pay his vendors through UPI. That's it, right? And then basically he used to go at the end of the month or whenever, what is the amount left, he'll kind of withdraw it and go back to his cooperative and just submits it, right? That was the kind of chain which started happening in the economy. By digitizing cooperative bank and giving him the UPI, now that bank goes to the same customer and says, here's your bank's UPI. Right? So the collection which he was doing in a checking account starts happening through his cooperative account.
Right.
And once he starts happening in his cooperative account, his loan starts getting paid automatically. Whatever his OD facility he had,
right.
Earlier he would take the OD facility, use it, and then can pay it at the end of the month. Now it is automatically getting regenerated. as
Right.
he is collecting in the same account. That is number one. Second, whatever collection he has and the net balance he has, he can save in a FDRDs with a cooperative account. So a lot of that digitization play which happened for a person like you and me, where you could save, pay instantly, take insurances, get into credit, right? Formal credit is all can happen for those guys also. Because he starts having a digital history.
Right.
Once he starts having digital history, you can push that data to the bureau and say, yeah, here's a payment which he's done for his loans. Here's the payment collection he's doing. So all of that starts getting utilized, and all those new to credit customers start getting primary data and
Right.
start getting added to the credit pool of the country.
And how many cooperative banks are there in India?
So currently, the way the scale Kulmani is that every state has a state cooperative bank. So typically, a state cooperative bank works with a state government. Typically, all the exchequer's money go through that. The way it happens is there's a state cooperative bank, then there are district cooperative banks,
Jila Sehkari Bank.
Jila Sehkari Bank, and then there are PACs, which is the primary agriculture cooperative societies.
Right.
So the money flow, even DBT, happens through this layer where state sends to DCCB sends to PACs sends it to the farmer. And then the collection happens also this way, right? So that's the state level cooperative banks. So there are 34 state cooperative banks, there are 350 odd Jila Sehkari Bank or district cooperative banks, and there are 1 lakh cooperative credit societies, which are PACs. Then there are private cooperative banks, which is called urban cooperative banks, which are basically around 1,500 in number. These are typically community banks where each person who has an account is a member also of the bank. So same cooperative principle. And typically these are community banks. So if a town like Godhra will have 4 communities, each community will have their own cooperative bank.
Right.
And every person will have an account and will be a member of that bank. What does that mean? That at the end of the day, whatever profit is left is distributed among the members only.
Okay.
Depending on the shareholding which they have.
Right. So out of these cooperative bank, is there also a trend? Let's say there are districts in Maharashtra or UP which have a large number of sugar mills. Do they tend to have more of such societies? Because that's what my understanding is.
So if you go back in the history, right, cooperative movement started in 1890 in this country. So first cooperative bank was actually established in province of Madras in 1904 at that point in time. And then each province took it up because after the 1857 and all of that, there was a lot of need to give credit to the farmer because India was primarily an agriculture society. And even today, although it happens, the farmers used to take loans from local landlord owners and would get into exorbitant debt and all of that. So they started these cooperative banks, and then it was picked up by West primarily and other southern belt. And then it kind of came into North. So cooperative movement as such is very old in this country, and they've been there for ages. So they kind of formalized it in 1904 by passing a Cooperative Credit Society Act. And then basically it kind of grew. And today we have a system where it is completely democratized. There is every state has a state cooperative act, and then all the banks come under RBI now directly. So from a regulatory perspective, it is same license which a cooperative bank has with some restrictions, obviously, like any other bank has. So they have a banking license, and state cooperative basically work with state governments to figure out their structure.
Okay. So it will be similar to, let's say, Schedule 4 commercial bank.
No, it's not a Schedule 4 commercial bank. So there is a separate section of a cooperative bank under RBI regulations. But so there's a Banking Regulation Act 1949, under which there's a separate section where the cooperative banks guidelines are there.
Okay.
So this is a very recent phenomena. Earlier, they used to have primarily the law which used to govern them was the State Cooperative Act, and the secondary was RBI. But in 2020, RBI said nothing doing. All cooperative banks will come under directly me.
Okay.
So I will be the primary regulator for you, like I am for a scheduled commercial bank or for a SFB or for any other purposes. And they will basically form all the regulations which I have. You will also have to follow it like everyone else follows it. So they went from let's say there was a lot of individual directors and all of that, to elected board, which is now there in every cooperative bank. They have ensured that the risk compliance is much better. So RBI actually after 2020 came up with circulars after circulars on specifically on cooperatives, how they should have technology usage more, how their members should be treated, what kind of disclosures they should have, what kind of reporting they need to do to RBI, and so on and so forth. And thirdly, it has also led to better financial growth for them. So today, if you look at last 2019 to 2024, which is the data which is available with RBI, the cooperative banks have grown about 2x in their deposit, 2.5x in their loans, and they have grown their return on assets by 0.5. It used to be 0.5% earlier. Now it is close to 1%. So a lot of that improvement has happened once the RBI has taken over a lot of these cooperative banks. And that's why you see a lot of action by RBI. I mean, everyone reads the news saying this cooperative bank was penalized by RBI, that bank was penalized by RBI. So although the sector comes into play in a very negative sense, but it basically tells you RBI is so proactive with these guys. RBI also penalizes Kotex and HDFCs also, so it's not like that. But because of that, there's a lot of discipline which has now started coming into these banks.
Right. And so obviously more transparency, reporting is better.
Everything. So if from an expense perspective, from board perspective, from regulation perspective, everything.
Right. So the main problem, just to summarize, which you are solving is that these credit societies and cooperative banks don't have connectivity to the digital world.
Yes.
From a banking side. That's the main problem, right?
The way we put it, Kulmani, is that we are basically digitizing half of the banking sector, which currently is still not digitized to the real, the current world needs or modern world needs.
Okay.
Be it from a back-end perspective, which is called a core banking software, or a front-end perspective, which is like a mobile phone or mobile app by cooperative, or getting them connected to UPI and all those other kind of things.
So how do they maintain their books if they don't have core banking system?
So they have.
Okay.
It's not like they don't have. They have, but they have core banking which is easily 10-15 years old. So, and a very local software. So what they did is, when they saw core banking happening, instead of going to a player like an Infosys, or because they were very big players, they went to a local mom and pop shop of a software provider. And basically they said, okay, can you build me a core banking software? So that guy had an accounting software. He kind of repackaged it and gave it to them. So they have some form of software which they use, which they call it as core banking software. And they basically utilize their transactions or record their transactions over there. But now the world has changed, right? The technology has changed. But these are old, rigid systems, typically batch processing, all those kind of old world problems are there. Now RBI wants them to report every month, every quarter, every year in a certain format. Their software is not ready for that. RBI has come up with a circular saying for your core banking, all these things should be there. Your data protection act, your data protection should be there. Your risk metrics should be implemented. Your customers should be able to access it. All those kind of things, right? Now, these guys typically don't have all of that. The certifications which RBI permits, right? So it says it should be PCI DSS, it should be ISO 27001 and all of that. So none of these players are like that. Because these are very local players. So Gujarat, Ahmedabad will have one guy who will basically be catering to this district. Then there'll be another guy in Godhra, there'll be another guy in Nasik, like that.
Okay.
So that's how they currently work. And our idea is, can we formalize it and give it to them on a SaaS basis with a new tech CBS, which can be open on the cloud, scalable, and with all the new compliances which is required.
Right. Got it. And how did you come to this idea that we want to build this? I know Amit is not here, but a few are building it together.
So, very frankly, Amit's idea, not my idea. So, Amit actually used to build a company called AirPay
Okay.
It's a payment gateway company. So he used to work with banks a lot. So he's one of the guy who actually brought some of the PSU banks into acquiring. So what does it mean is when a card transaction happen, there is a lot of banks issue cards, issue credit cards or debit cards. But the acquiring is done by mostly top 6 or 10 banks. What does by acquiring means? The POS machine which a merchant has, the bank who provides that POS machine is the acquirer, right? Because the transaction happens on that. So he brought a lot of PSU banks, including Bank of Maharashtra, into acquiring, saying we will give you white label solutions where you can get acquiring, because the fee which every credit card MDR, which is called merchant discount rate, gets divided into acquirer, issuer, and the network. So that's how it worked. And then he started going to other banks, and he saw that he realized that there is a lot more banks than what he thought there are in this country, and they face a much bigger challenge than just the payments, right? Their challenge is, as I described, right, very bad core banking,
right,
no digitization, no mobile app for the customer. I mean, when I first time moved in, saw a cooperative bank, my parents are in SBI. So my father has been with SBI since 80s, 81 or 82. And it felt like I moved into an SBI branch in 90s, right? Same
yes,
old type, one computer somewhere lying, somebody will come and do the data entry in that. Lot of vouchers, those pink and green and blue slips. Then a lot of staff for cash and all of that. Those tokens, cash tokens used to be there and all of that. So you just feel like you are 2 decades, just your life of 2 decades in terms of banking are washed away. So imagine, Kulmani, 50% of India's bankable population still banks like you used to bank 20 years before.
Yes.
Right. So we, basically he saw that and we saw that and we started saying, okay, can we do something about this more than payments? And he started building the product post-COVID and launched the company in 21. While the company is registered in 19, but post the product, etc., started getting built post-COVID. And that's how we went to the cooperative credit societies first. We gave them a mobile app, simple mobile app, saying so that your members can at least see your balances, etc. on mobile app, right? Today, otherwise, the customer, for even balance check has to go to a branch. There is no way other than that, right? If he has to see the credit has come from my guy who is migrated in the city to my account, he has to go to the branch and check. There is no other way. So he gave everyone a free mobile app saying, give it to your customer so that at least they can see their balance. Basic banking, at least they can do in the thing. And it just took off in Maharashtra. It just we had in 6-7 months, about 200 societies working with us.
While he was at AirPay?
No, after AirPay, he left in 19.
Okay,
this is after AirPay. He launched OneStack in 21, built the product and launched it in Maharashtra for cooperative credit societies.
I am assuming credit societies will be big in Maharashtra because Maharashtra is
very
also
big.
Sugarcane.
Yeah, right? Very big. So cooperative credit societies in Maharashtra, some of the credit societies are bigger than banks.
Yeah.
20,000, 30,000 members, 1,000 crore, 2,000 crore balance sheet and stuff like that.
Same Western UP also has a lot of sugarcane.
Yeah, exactly.
So wherever you see cash crops, you will see farmers groups coming together
and building something like this because they needed credit. And this credit actually in erstwhile day, bank also used not provide, right? Bank will say take loan, but start giving me EMI from tomorrow. While this is like, I will take loan today, then there'll be a crop, and then I will pay the amount, right? So it's a different product which is required. I have seen cooperatives for artisans in UP, where there's a group of artisans who have a very different need because they need the thread, the cloth, and all of that at a particular time, and then it takes them, a year or so to build what they are building. And then once they sell it, they pay back the loan.
Yeah. It makes sense. So it's very nuanced in that way.
Yeah.
And this is, I'm saying, like even before the Kisan credit cards came,
much
right?
before. As I said, right, cooperative movement is more than 100-year-old. So Kisan credit card came now, right?
Right.
And the other thing is it's very community-led. So whatever may happen, I have seen cooperative banks where the customers will come and say, my 3 generation before used to bank with this bank. So my great grandfather, grandfather, dad, and now I. Right? So I have that kind of history sitting in cooperative banks. But that guy is still new to credit. Why? Because the cooperative bank didn't get digitized. So the data always remained with the bank.
Right.
Right. But if you can digitize that data and pull it to the bureau, it is such a big, it's a primary data of that customer will have a much better credit score. Because that cooperative bank not only knows of his generation, he also knows where he lives, where his shop is, where his house is. Maybe in the evening they're playing together cricket or whatever, right? So he has all the primary, like we talk to a lot of NBFCs come to us and say, okay, we look for alternate data to give credit, because NBFCs basically got into this country to cater to the same audience which cooperative banks cater to, saying, okay, cooperative banks are not giving you loans, we will give you loans. But they don't have the primary data. So we look for all kind of alternate data. Okay, he has a smartphone, he's buying on e-commerce website so much, and all those kind of alternate data, right? Social media and all of that. These banks have primary data of those customers and for generations, right? And they are in a much better position to give loans and collect loans because they have both. Physical is already there.
Right.
You just have to provide them digital tools to digitize and fast track some of those decision making. But then they can collect very quickly. They will know whom to give, what amount to give. All those things they know.
So 2019 when it started, right? And then, so when did you join OneStack?
So I joined in 23.
So in last this 1.5 year, how has your understanding evolved? Like when you,
I started, me and Amit are batchmates from INSEAD, right?
Okay.
So we were always talking. He actually shifted from Bombay to Gurgaon. Post-COVID, when he started OneStack, and we were always talking as my last role. And we used to travel to some of these places and we used to see what is happening. Because one of the things we always wanted to do was to make sure that we build a product which is required, not just build a product and then go. So we used to sit in banks and see what customers are looking for, what banks are looking for, and so on and so forth. Because we had practically no person whom we knew in banks, or we had no connections, or we had that ways no background also, right? So it was just you had to learn as you kind of build. So you used to sit in the bank, see these customers walk in, and we saw that profile of the customers have changing. So earlier, the grandfather will come or the father will come. Now the new generation is coming in these banks also. And we saw they are asking the bank, if Paytm can give me everything on phone, why I can't see even my bank balance on my phone when I'm banking with you. So that's where we started seeing, okay, there's a lot of things which can be done, right? And then basically we built the product, we saw that success, and that's when we raised our first seed round. And then after our pre-series A in 23, we started going to cooperative banks. And today in 1.5 years, we have 200 plus cooperative banks working with us, primarily on 2 solutions. One is mobile app and the payment services, the UPI and the Soundbox, which they give it to their merchants to make sure as I got the use case done. And parallelly, we built our own core banking, which is specifically for cooperative banks. We built our own, we're working with NPCI. So NPCI has this partner program where basically they certify the tech players that they have the technology to provide it to the banks. So we are certifying, we are getting certified. So if you go to NPCI partner program website, you'll see our name. So we are getting certified under UPI Switch, credit on UPI, RuPay, BBPS, and all those kind of things.
When you started working on this problem, maybe you already had your own hypothesis that this is going to pan out this way. And so how has that changed after spending, let's say, last few years? What are like some things which surprised you, or something which were positive or negative, both?
Yeah, so as I said, right, so I very frankly didn't have much of hypothesis before I started actually traveling with Amit or looking at this segment. But my first surprise was actually I didn't know this Bharat existed. Right? I didn't know that there are still banks who are still physically, customers have to go to the branch. I mean, when was the last time you went to the branch? When was the last time you said, okay, for a balance check, I have to go to the branch, talk to a person to check my balance, right? Or do a fund transfer or whatever, right? So I had to forgotten about all of that. And now even we don't go to an ATM to withdraw cash with the UPI and all
Right.
that. So first was that eye-opening, okay, this is... And then as we traveled the length and the breadth of the country, we saw that it's not a small problem. It's actually a big problem. Or an opportunity, as they say, right? It's a big opportunity to actually work in a way like what Aadhaar did or a lot of these things did for us. We can do the same impact for the tier 2, tier 3 and rural India, where we can digitize them, get them into formal economy and bridge a lot of that gap which we have. I mean, a lot of reports talk about a credit gap of almost from 650 billion to 2 trillion, which currently India needs to fulfill to get their MSME and SME sector to get to a 10 trillion or a beyond economy. Now, that gap exists because a lot of formal credit information is not available for half of Indian population. Now, we believe if you can digitize cooperative banks, a majority of that problem will get solved.
And when you compare cooperative banks to private banks or public sector banks, what are some of the fundamental differences? From a structure point of view, maybe their objectives are also different. And shareholders, I mean, the structure is like totally different, right? Versus private banks.
So the biggest difference is the basic. A private sector bank or a public sector bank basically have a shareholding, where a public or private individuals basically own those shares, right?
Right.
And in a cooperative way of living is every customer is a member of the bank also. So in that sense, a shareholder in a bank. So his interest is also to keep the bank going and he gets a share of the profits of the bank, right? So that's one way, and plus it's a community-led bank. So everyone pools in and then gives money to whosoever is required and then gives money. That's the basic level of difference.
So the initial paid up capital comes from the members?
Members.
Okay. And
not initial, every time.
Every time.
Yeah. So they cannot raise capital from anywhere else.
Okay.
Right. So they are not they cannot go to public market and list themselves. They have to convert. A cooperative bank can convert into a small finance bank and then get listed, but then it's no more a cooperative bank.
So not even government can infuse capital into
No.
that? Okay.
No, except for state cooperatives, which I described the structure, which
Right.
is state driven. But other than that, the UCBs, the urban cooperative banks, is a cooperative bank. But they can borrow money.
Okay.
Right? They can borrow money to give loans and then pay back. And they can invest also. So that's the basic level of difference. Then the second difference is a scheduled commercial bank have a lower private sector lending targets. Cooperative banks are required to have 65% of their lending has to be in PSL segment, which is priority sector lending.
So priority sector will include what? Agriculture,
EV now, for example, a lot of other things, infrastructure development and all of that kind of things.
That's 65% of their loan book should be in
private sector lending.
Okay.
So FPOs like farmer produce organizations which actually give fertilizers and all of those kind of products to farmers is one of the key projects which is there.
What do you think about FPOs? You think they have been successful in India?
So
because I'll tell you why I'm asking this question. So probably about a year back, 2 years back, we published a report called India Growth Story. And when we were writing, I looked for success stories of FPOs in India. So I found couple of maybe in Tamil Nadu there is one run by I think Isha Foundation or some other case studies which I could find, but there were very limited data which I could find on FPOs.
Same thing, right? Majority of the FPOs today also work with cooperative, and they are typically run by individuals. There are very few organized FPOs, except I think I'm not sure, but I think Amul has one for their farmers and so on and so forth. But typically it's run by individuals within a cooperative. Whatever we saw, I have not seen any data on FPO. I have not researched as well. But whenever we go to cooperatives, especially in Maharashtra belt, Gujarat belt, or UP belt for that matter, a lot of their funding, a lot of their lending actually goes to FPO.
Okay.
And I have seen a very vibrant FPO system. For example, in Maharashtra, it is very vibrant. Every small town will have one or two, which typically the whole district farmers will come and buy their produce. And they typically have a bank account in a cooperative bank, and cooperative banks will have a very big, lending as well as deposits from these FPOs.
Right.
But this is all in my travels, during my travels, what I have seen. I have not seen any data around that.
So when it comes to priority sector lending, all banks have a mandate, right?
All banks have a mandate. Like small finance banks also have a mandate where they also have 65-70% of their lending has to go to PSL. Cooperative banks also have that. So they used to have 60%, now it's 65%, and it will increase as they move forward. So that's number. So structure is different. Lending books is different. The third biggest point is RBI also now wants them to get into technology. So from the stage where they are in terms of technology implementation, as I said, they are almost 15 years, 20 years behind. So RBI now wants to get them at par with some of the new age banks are, right?
And they are lending at the same rate.
What does that mean?
So cooperatives are lending at the same rate at the PSU for when it comes to priority sector.
More than that, right? Okay. So from a percentage of books, more than that, but quantum obviously is less, right? Because the exposure is less. So that's one major difference. But from a management perspective, same. So they also have a board. They also have a CEO and the leadership team, and then they also have branches. So pretty much the same way like a normal bank functions, they function. Obviously, the other piece is geographical thing. So if a cooperative bank has to function within a certain geography, typically within a state, typically within a district.
Right.
If they have to become multi-state, they have to take an approval. So multi-state cooperative banks need to go from a single state to multi-state, you have to take an approval.
Okay.
Right. While a SFB or a commercial bank can open anywhere, a cooperative bank cannot go out of their location.
Okay.
Regional location.
So what my question was, just to clarify, that when they are lending, the interest rate for cooperative banks is similar to PSUs, largely speaking, for priority sector.
So from a interest rate point of view, it depends. So from a farmer perspective, agriculture perspective, yes.
Okay.
It can be equal or better. For some of the things, because see, for a urban cooperative bank, it's a members, right? And typically members decide. They don't go exorbitant also because it's ultimately members, but they also don't go very low also, right? But it's a very nice line where they provide lending. Typically their lending rates are higher because their cost of capital is higher.
Right.
Right. Because their FD rates, for them to get deposit, they have to give more better interest rates than a public sector unit bank or a private sector unit bank. So that's why their lending rates also a bit higher. But the fact is that for a cooperative bank, because he's there in that place and location for ages, his lending decisions are better.
Right. I think for members also probably because there is a opportunity cost, right? Because they are giving the capital as members to their bank. So obviously the lending rate has to be.
So for whatever we have seen, Kulmani, typically members prefer to take a loan from his cooperative bank if he's in the community bank, because he's given capital and all of that. Plus he has the relationship of that bank. But what has also now with fintechs coming in and the ease of loan which is now happened, right? All the fintechs now are saying, okay, pre-approved loan of so much rupees. As soon as you open any app today, you have that.
Even Paytm shows me every day.
Every day you have a pre-approved loan of so much rupees, right? And that is where the game is going. Where obviously for corporate, if you have to go and apply for a loan of cooperative, it's still a physical process. Right. So we were at an event and somebody told us that today to take a loan from the application to getting the loan is about a 3-month process. Okay. And RBI wants to make it in a day. Even KCC, the idea is to give it in 6 minutes. Right. How will that happen is only can happen through digitization, right? I should have with AA framework, I should have all the records pulled in.
Right.
I should have your land record, I should have your crop records, I should have your credit score, all of that kind of should just work like magic and you should be able to get loan. So that's where the technology is heading. And that's where cooperative banks, even not cooperative banks, right? Even the private and public sector banks have to catch up to that.
I think KCCs can still take like few weeks time. I don't think it's happening.
No, it's not happening. That's what I'm saying. Because it's not happening. Why? Because the land records are not digitized.
Right.
So if I don't know which land you have and I don't have that clarity, how will I underwrite a loan on your land?
Some states have done a good job. I think Gujarat has done the digitization complete. I'm not sure if that's
I'm not also sure, but there are about 5 states whose land records are digitized. And over there, a lot of this can happen.
I think otherwise, when it comes to disbursement for personal loan with new private sector banks, it's like hardly 60 seconds, 1 minute, something like that.
Yeah, but
I think it will take.
But that's unsecured loan.
Unsecured, yes.
And we all know we are unsecured with micro lending getting into trouble right now with banking sector where we are. So there's a lot of work which needs to happen. I mean, also coming from not just cooperatives, right? Even as a banking, if you look at our banking sector today, right? I mean, RBI is talking very openly about this, that the UPI, the 85% share of UPI is with fintechs, PhonePe, Google Pay and Paytms, right? Banks have very less amount of share. With all the digitization happening, banks per se as a banking sector, the back end of the banks, the core banking is still very old, even for the bigger banks, right?
Correct.
We had cases where RBI banned Kotak for not taking any digital onboarding. Why was that? It was because the core banking and all of that is old, right? So even as a banking sector, from a tech perspective, why are they lagging behind fintechs? Is because of the tech needs to get evolved. The tech is still very old, very rigid, right? The integrations take years, not only months. So while fintechs today do integration within weeks, right? So that also is very ripe for transformation. It needs to get modernized. It needs to get, the tech needs to get upgraded even for bigger banks. So if they have to compete with fintech, right? The pace of fintech as well as the technology which a fintech comes in play, banks are lagging behind big time. So even that particular segment, it's not like they are at a great place in that sense, right? They are losing ground from fintech.
And I saw yesterday some news that there is GST on UPI and some people were debating around MDR on UPI. I don't know if about 2,000 rupees.
Yes. So the story over there is, so UPI obviously came in 2016, right?
Right.
And government made it free for everyone. So you and me don't pay anything like if you use a credit card, you pay a 1%, not you, but the merchant pays 1% of the collected amount. Or if you pay by debit card, merchant pays 0.25% of the amount, right? UPI is completely free. So if you pay 100 rupees, merchant also gets 100 rupees. There is no money. But to maintain this whole technology, there's a cost, right? Which currently all the fintechs and NPCI and everyone is kind of taking, right? Banks are taking. So government, basically the fintechs and the banks are going to the government saying, this is zero revenue pool for us. can we start doing some kind of MDR on UPI as well? Right? Now, UPI has grown how it has grown because it's been free, right? The merchants have no issue taking it and all of that. So what the debate which is going on is, how can you put a revenue model on UPI without disrupting the growth of UPI? So the current thing which is in news is, which government and a lot of people are proposing, is that can we start putting in MDR on transactions above 2,000 rupees? Because they want to exclude the small ticket item. And the second thing they are trying to say is, we will only charge for merchants who are above a certain threshold of revenue. So it will only go for bigger merchants and not for smaller merchants, so that the smaller merchant remains conducive to still taking UPI.
And what do you think will be the second order effect of this, if this comes into play?
So one is, a lot of us fintechs will become profitable. It's a big pool. Because see, the numbers are public that it takes about 10,000 odd crores to maintain all of this.
So we are talking about basically the Bhim infra which is in the background, right?
No, not only UPI, right? Bank also incur a cost.
Oh, right.
So what happens is, when a UPI, you transfer money from HDFC Bank to an SBI, HDFC Bank actually pays a switching fee for that transaction.
Right.
Similarly, SBI pays a switching fee to this transaction. Similarly, there's a cost of, if you have done it through Google Pay, then Google Pay also have a cost of building and maintaining that infra, right? And then NPCI obviously has the whole rails to maintain.
NPCI shareholders are banks only, right?
Banks, primarily banks and government. So that's all obviously there, right? So a lot of people say that we need to have at least 0.25 to 0.3% as the MDR on overall UPI to make it, to recover the cost which basically we are incurring right now.
So the second order effect could be that large merchants still, let's say, if you as a person, if you go make a purchase, let's say in one of the markets in Delhi, a lot of time they will say, I will not take credit card payment. Or I will, some people even like, let's say...
I don't think it will have that much of an impact, personally speaking. Why? Because credit card is still 1%, right? Even if this is 0.25%, it's hardly anything. That's almost his CMS charges.
Right.
So if a big merchant is there, he will anyways have a cash management charge which he will be paying to the bank for collection of cash, right?
Right.
And that collection of cash typically is in that range. So for a big merchant, it's equal to cash.
Fair enough. But do you think this is real? This is going to happen?
So there's a lot of this thing. And so there are both sides, right? I believe it will happen next 1 or 2 years. Because at the end of the day, it has to become self-sustaining. Right? It's something like we faced in Bharat Petroleum. I used to work for Bharat Petroleum, and we were the child of deregularization. So before us, the government used to tell us what price to give.
Right.
And then they gave us a formula and you decide. So based on international crude prices, they gave us a formula on which I can decide the pricing in this country. And then the oil started going to $100 and all of that. And then the government used to come and said, okay, don't increase prices like this. This is the amount of subsidy I will give you. Whatever is required. So if I need to increase the price by 1 rupee, government will say 1 rupee into the oil you will sell.
Only for the retail buyers though.
Only for retail buyers. So I will give the subsidy. But after a point in time, it became such a big exchequer issue that they said, okay, now we have to completely deregularize it. And it has to become self-sustaining. So that's the same way I think UPI somewhere will have to go. It will start by 2,000 rupees plus and bigger merchants, and then it will start percolating down because government will see how is the effect. Is it leading to any deduction?
And I think if we apply 2,000 rupees threshold, then it will be more or less like a 80-20 split, right? Large percentages below 2,000. I'm not sure. I haven't checked the numbers.
I also don't know. But average is about 9. Average UPI ticket size is, I think, around 1,000.
Okay.
So I'm guessing it might not be big. But I have not seen the cut where large merchants and transaction above 2,000 will be how much percentage?
Right. But your core customers are still disconnected from the UPI world, right?
Yeah. So like today we have 200 banks. We have lakhs of customers currently now using UPI, right? Over there, our average is about 800 rupees. And the above 2,000 will be very less in our case. So more should not have.
And what is the reason, do you think, these banks or cooperative banks did not have access to what you're trying to provide?
Same thing, because they didn't have the right backend. They didn't have the security protocols. And they didn't have a tech player who could give them that thing, right? Because if you want to get connected to NPCI, you need to have all those protocols in place.
Correct.
And you have to have a right amount of technology in play from a core banking perspective as well.
And besides, if we just zoom out and think about what is the role of these banks in the lives of people or members they are serving, whether it's society or cooperative, basis your travel, what do you understand? What is the connection and what is the role they are playing?
So as I said, right, I have been to places where there's only one cooperative bank for let's say a small town. A small town has 2 markets and the cooperative bank has 2 branches.
Right.
And typically it's a very, if you good old days, right? The bank staff needs all their customers and know all their customers personally. Customers know their bank staff name. Who works where, who's cashier, who's teller, who's manager, everything, right? And I have seen people going and saying, "Arey, iske saath to I play football with him in the evening, or I play cricket with him." So that's the kind of, it's a very small world in their sense. Everyone knows everyone. And for customers, they are the first bank. They are the first protocol for any financial decision. Let me put it that way. So if they have some marriage coming in the house, what they should do? Should I break my FDs or should I take a loan? Right? If there is a bumper crop, I have got some amount of money, what should I do? So all the financial decisions of the family, of the person, he will first go to the bank and ask the branch manager or the CEO or whomsoever he knows, right? So that's basically his whole financial needs get catered by the cooperative bank. It's as pure and simple. So, for example, one of our cooperative banks launched an insurance product, right? Simple. So he took, I will insure your life. Now, for everything from form filling, first making them understand what is this, to form filling, any claim comes, claim didn't approve or whatever, right? Everything was through them. So they are the first port of call for any financial decision for this public.
So in that way, their role is critical.
Very, very critical. I mean, they have survived 150 years for a reason, right?
Right.
With all the migration. So, I mean, okay, I'm going to the city for work, right? So, which bank should I open an account over there? How will I transfer money from here? To an extent, I'll tell you a very interesting story, in fact. So, we were at a bank and I was talking to a manager and he said, you know what? I keep some cash in my house. I said, why would you keep cash in your house? He said, because what happens is if late night there is an emergency, they come to my house. Okay, I have this emergency, there's something happened, I have to take him for some hospital or whatever. Do you give me cash? So I give them cash in the night and make an entry in the morning.
Wow.
That is the rule.
Interesting. And for the new generation, probably they won't realize that some of the new private banks are only like 25, 30 years old. Even SDFC, ICICI, all these came in
all in 2000s.
90s, late 90s, 2000s. So that's also, if you think in terms of time frame, it gives you perspective, like how important role they have played.
Yeah. So private sector banking came in this country about 25 years ago. And cooperative's been there 150 years now. 1890s first cooperative.
I do remember like debit cards and all around our families. around 2003, 2005 is
Yeah,
when actually people started getting debit cards,
Absolutely.
etc.
Absolutely.
Before that, it was only checks and withdrawal forms. I remember filling withdrawal forms. And
Yeah. So if you go to a cooperative bank, there are still withdrawal forms. There are still those. So the FD has a separate slip. The saving account has a separate slip. Current account has a separate slip.
Yeah.
Loans also, a car loan has a separate slip, and all of those kind of things.
Yeah, interesting. So one of the themes which has been which is emerging from the conversation is that these banks have been very slow to adopt to technology for whatever number of reasons. So when you go and speak to them, let's say you go meet a branch manager or a CEO of a state cooperative bank and you pitch them your product and you show them the picture, right? How is their response?
So it's just, let me just take a step back, right? So let's see where we are, right? Let's see the playground. For them, the playground is a local town, right? They're typically, they know everyone, they know the customer comes to the branch and everything, right? Now, why would they take up technology when they see ROI, right? These are bankers. They will first want a return on investment on any kind of investment they will make, right? Not only to their customers, they will also apply the same to themselves.
Correct.
So when they saw the CBS coming in, all the banks who had 4, 5, 6, 10 branches, they actually went ahead and adopted it. Nobody kind of forced them, right? Now, with whatever form factor they adopted, is within whatever was within their exposure, right? And all of that. So all of these cooperative banks have a CBS. Then basically came the whole UPI wave, and then now came the digital wave. So these guys will take technology when the customer will ask for technology, right? Like any other businessman, right? I will invest if my customer is ready to pay for it, or I see an impact on my business because of it. So it's a simple, like every technology starts from a Western world somewhere, then came to top 1% of Indians, then went to 10%, then went to next 20% and so on.
That adoption curve, early adopters.
Exactly, early adopters and all of that, right? So they have a back-end system, but they didn't have a front-end system. UPI, when the start happened, UPI wave happened, Aadhaar happened and all of that, they realized that now the customer also wants the front-end system.
This will be 2016, 15, 16.
Post 2016 and somewhere, right? Third thing which happened was that a lot of fintechs started reaching their customers. So the competition was not from another cooperative bank, which was typically not there because you had your own community or town or whatever. The competition actually came from the new fintechs who started reaching to his customer, and the customer said, "Ha, yaar, matlab, I can, on a Paytm wallet, I can see my balance, I can do my fund transfers, I can pay my bills, right? And I can do much more e-commerce and all of that. While you are not providing me that service." So part of merchants' collection started going to that checking account or the Paytm wallet or whatever, so on and so forth. This is must have, must need, right? It's a need to have. So now what happens is when we go to smaller towns, they are actually already looking for someone who can provide them that technology to get their customers also a mobile app.
Okay.
You won't believe a lot of cooperative banks gave the same local supplier 10 lakhs, 20 lakhs to build an app. And problem is local suppliers also didn't deliver. Right? Our thing is we have made a SaaS model, completely digitized model. Our sales team actually goes to a bank saying, "Here's your app, already built, test it," right? So what happens is for him, completely the life changes. Okay, the app is already there. How do you get it? So that becomes a very easy proposition for him because he's already looking for a solution. It's not like he's not looking for a solution. So he's already looking for a solution, but he's looking for a person who can deliver it to him.
But is it that easy? Do you feel other hurdles in those conversations? Do you still need to convince them as a new player?
See, obviously,
it's
you
not
need to convince them. But
because money and food are very personal things, right?
yeah, but for a banker, it's a business, right?
Right.
So for him, what are the key barriers? Well, we always start with that. For him, in a buying journey, what are the key barriers which he has to cross before he buys, right? One is, does he have a need, right? Or is it like I have to create a need?
Right.
So
which is
whatever we have seen,
this is also the job theory. Like there is a job to be done.
Yes, right. So he definitely has a need because one, his customer is asking for it. Secondly, the regulator is now telling him to upgrade his technology. Thirdly, it started impacting his business, right? Deposits and all of that. So first, there is a need, clear need. Second, the hurdle which he has is whether the technical provider whom I have, can I trust him? Right? Because it's a financial transaction. So what we said is, take this, give it to your 5 staff members, okay, and test it. And we give them a certain period free, right? Okay. And then the third point is, so once he does that free period, he sees, reconciliations are automated, money is coming, the app is working fine, functionality wise it is great. Plus the staff also gets used to using the app, right? The third is pricing, how much I have to pay. That also we kept it very, very low. And the fourth is adoption, whether my customer will adopt it or not. So we have seen all the hurdles. We have crossed all the hurdles. Today, we have 200 plus apps working simultaneously with banks, with lakhs of customers using the app, right? And banks have collected more than 500 crores. So what that has clearly shown them, the CASA has grown by 500 crores for them. What does that mean? That once the CASA grows by 500 crores, that's the lowest cost deposit. The cost of funds have come down.
Yes.
So all of them have seen zoom in their profitability, right? So we have solved the liability side of their balance sheet through digitization. Once this is solved, it's very easy. I mean, it's like providing them extra raw material for making money, right? Because once they have more deposit, they can lend more. They can lend more, they can make more profit.
Assets are better, return on asset is better.
Right. Plus his customers have more engaging now, because his customers can do what a private bank customer can do. So their engagement has become better, service have become better. Customers who had gone to fintechs have come back to them, right? Like you said, right? If your village, that why did you move maybe from a cooperative bank to a private bank is for the reason that, boss, I can do everything at home. I don't have to go to the branch. Now, if a cooperative bank only is providing you that service, I'm very sure you will go back to him, because you will still have an account which has been there for ages. He would have given loans to your dad or to your grandfather at certain point in times, and all of that kind of nostalgia feeling is always there.
So I think we still have the account, but I think that bank is now part of PNB.
Okay.
So because some of the RRBs are now aligned with PSUs and they use the same tech.
Yeah. So what basically each cooperative bank is linked as a sponsor bank, we call it a sponsor bank. So So but that's what I'm telling you, right? So just going back to your question. So one is that we made sure that all the 4 hurdles we cross. Otherwise, there's no way we can 1.5 year cross 200 banks and across north and west. You know the length and breadth, right? Today I have account banks in Maharashtra, Gujarat, Rajasthan, all the way till Mizoram, right? So and with 6-7 salespeople sitting majorly in Gurgaon, we've closed all these banks.
So all these deals are closed like just calling them, speaking to them, or do you actually have to physically travel?
So we typically prefer to travel once the bank is live.
Okay.
Right. For us, typically what happens also is, once you make one bank live in a district, other banks actually just see, the impact that bank has, because their customers start getting QR and all of that. Their customers are like, that cooperative bank is also giving now. So we start getting inward calls also. So that's typically how it works. But point, Kulmani, is that the need is there. And what we have made sure that we don't do bank by bank dealing. Standard pricing, standard model, standard sales, and good customer service. No downtimes. If there is a query, gets solved within 24 hours. All those kind of basic stuff which we have ensured that without any, the banks have, for us, there are banks who have collected 50 crores and had not deployed even a single additional resource, right? Just activated their customers. We have the reconciliation is automated, the money comes automatic, the credit happens automatic in the customer account on a real-time basis. So all of that is there. So if you have that kind of a thing where without any operational cost you are getting the new CASA, why not?
So the front end of the app looks same for all the banks, or do you change something?
No. So it changes. So basically the way it works is it is a bank's app. So bank color, logo.
Got it.
All of that is banks. The numbers, etc., obviously are connected with banks. So that's banks. So each bank app is different for the bank. And similarly, each soundbox, each QR is for the bank. So if it is a Bharat Bank, it will have a logo of Bharat Bank and the name of Bharat Bank in whichever form factor which he has as his brand identity.
And it will say like powered by OneStack or something like that.
So typically we don't.
Okay.
We don't. We are not B2C, as I said. The only places where we put our name is where it is required by regulation.
Right. So in your business, as I'm understanding more, this process and foundations of the business also become very important.
Absolutely.
Right. So how much thought or what have you done, right, to set the processes, because you can't have any downtime. There are all these incoming queries which you need to address promptly. In case they're an existing bank which you have onboarded, they have some question, you need to answer immediately because now the customers are dependent on the app, right? So how much thought have you guys given to setting up these processes in-house?
No, so even more than that, it's a regulated environment, right?
Yes.
These banks are regulated.
Yes.
So the first thing which we did is we actually went through all the regulations, all the circulars, and we said, okay, for providing this service, these are all the certifications which we need to do. So we went ahead and did all the certifications. So today my environment is PCI DSS certified. We are ISO. All the certifications related to ISO are there. We are RBI source audit review certified, and all the other certifications which are required. So there are about 18 odd certifications which are required, and we are completely certified on that. And as you're aware, if you have to get certified on that, you also have to build processes to get certified, right?
Correct.
Also build the tech around it to get certified. Also have the data center, DC, DR, all of those kind of infrastructure to get certified. So we did all of that. So today, basically, if you go to all RBI circulars, by checklist, we have got certifications across. We have got a complete risk module in place. We have got the complete compliance module in place in terms of not only checking early warning signals, but also reporting, also informing the bank, informing the customer, and informing the regulator. Right? So we have done all of that to ensure that we are always on the right side of the regulation.
Got it.
And that has also brought in the processes, the rigor, the security, the compliance, all of those angles. Because we had to get certified, we had to ensure that our tech is completely certified and has all those processes built into place.
Right.
So for example, the biggest risk, the simple question, first question you will always get asked is, what will happen to my data? Right? Because if the customer downloads the app, he will do the KYC also. You will have the transaction data also, all of that. I am already DPDP compliant. Right? None of my employees, including me or Amit, has access to data. It's completely encrypted. The encryption is as per RBI mandates. When the communication happens, it is encrypted. It is in a certain language. All of that is completely built in to ensure that we are completely secure. So because even a single transaction going through, which is not right, is a big risk.
I think that's very important lesson for anybody building in the license business.
Yeah, regulated business.
Regulated license business. That
so I am not licensed, but the bank is. So that
Right,
your
right.
customer is regulated, you have to ensure, because one incident can just, I mean, for a bank, it might be one incident, he'll maybe get a penalty. For me, the whole business will go for a toss.
Right, because then the whole trust and reputation that takes it. So that's important. Talk about competition. Like, do you have competition? Are there other players who have attempted or who are building similar things?
So
Is this a competitive space right now or no?
I mean, funnily, we get this question a lot. And funnily, we always say that we always get this thing that nobody has been able to crack this market, right? So we say, okay, so on one hand, you're saying, is there a competition? Other hand, you're saying nobody is able to crack this market. So obviously, we don't have competition. But okay, no. So there's been a lot of good players also who are actually working in this segment. But typically the way people have approached this segment is like a old software hat, which is what I will build a software for you. So you tell me your requirement and I will build a software, right? Which I will give it to you and then you use it and I will maintain it, right? Old thinking, right? Before Zoho and Freshworks, like every enterprise will go to a local player, build an invoicing solution.
Yes.
Build an HR solution, because we will say, I am different. I need my customized version of HR solution, my customized version of invoice solution, my customized version of accounting, so on and so forth. And then the Zoho and Freshworks came. There's a standard. Everyone needs these things in an HR solution.
Yeah.
I built all the features. Now there is a button, you can switch off, switch on whatever you need and start using it and pay me per use, right? That's basically the way we are thinking about this market. So there are a lot of people who are providing CBS. There are a lot of people who are providing, ATM switches, brown label ATM and all of that. But typically they think in this manner. I will go to a bank. Bank will tell me this is their need. I will customize the solution for him. And that's why I will charge an implementation fee. I will charge an AMC. I will charge then any development I will charge from the bank. Right? What we are saying, you are 2,000 cooperative banks and maybe 10,000 NBFCs. You typically have these needs in a CBS. I have built everything. Now you decide, switch on, switch off. Maybe so 80% anyways you will need. For 20% you can decide, maybe my loan is not tractor. I don't give tractor loan. I only give farm loan. So you can decide on that product, deposit or whatever, right? So this is how we are approaching it. So, customization is there, but to a certain extent, but within the product. So start using it and pay me as you use it. No implementation cost, no AMC, nothing. And second differentiation we are trying to bring in is typically the software providers has been into one product. So a CBS provider is only providing CBS. A switch provider is only providing switch. We are saying we will provide you the complete stack. So you take my CBS, which is the back end. You take my mobile app, which is the front end. I will give you the switch to NPCI also. And I will give you all the other services which you need. Debit card services or whatever, right? So for a bank, he doesn't have to think, I am his technology department. He doesn't need a technology department. You focus on banking, I will take care of your tech needs. But at a SaaS model, that too. No ROI needed because there is no implementation upfront fees which you are paying. You only paying me per use. So as you are using my services, you are paying me that. So it becomes from a CapEx to an OpEx. That too with a clear ROI. What I am delivering to you. So that's how we are differentiating ourselves. And I think that's why we think there's a big change which we can brought in.
Right. And that conversation, is it easy to have when you say that there's no upfront cost, these are all the benefits?
As I say, we don't have that conversation.
Okay.
We say, take it, use it for some time, free of cost, see the benefit, and then I will stop it if you want me to stop it without any charge.
Got it. Got it. And do you think in future some of your services will also be relevant to, let's say, legacy PSUs, etc.? Because some of them are still using.
So as I said, right, it's a very good question. So we keep thinking about this. See, if you look at the pyramid, right, obviously on the top is commercial banks and foreign banks.
Yeah.
But then there is mid-size, small-size PSU banks. Then there are 10,000 NBFCs also.
Correct.
Right. So what we are basically saying, ultimately we are building a stack, but you typically, if you go to the SBI, it's directly that I can build a core banking software for you. You'll say, who are you? Have you built it for a Dena Bank or a UCO Bank, right?
Yes.
If you go to a UCO Bank, he will say, boss, have you done it for someone else? So that's why this is one market which we have identified. We first want to crack it, make sure that we are the largest players.
Right.
But the services remain the same, right? The stack remains the same. The same CBS today is required by NBFCs because RBI has given a mandate that by 2025 September, you have to have a CBS. They currently typically only have LOS, LMS. They don't have a CBS. So once that market also opens up, right? Because the CBS is the same. It's just that if you're not taking deposit, you don't need the deposit side. But you need everything else. You need customer management. You need transaction management. You need account management. You need reporting. You need compliance. All of that is same, right? You need app. Different. You just need a asset side app. You may not need the lending side app.
Right.
But the whole thing remains the same. So our focus remains first on cooperative banks. But if you look at as a banking segment, as I said, right, even not only NBFCs, even PSUs and private sector bank, somewhere they will have to modernize in coming age. And if we are ready, we have already live and we have already taken up good market in cooperatives.
Makes sense.
Then you can always move up.
Right. Now switching to just thinking about, because a lot of your end users are in tier 2 and beyond and in rural.
I just want to correct that actually.
Okay.
Because this is a perception we always have that cooperative banks are in rural and all of that, right?
Correct.
250, so 15% of cooperative banks are in metros and tier 1 cities.
Right.
Gurgaon has cooperative banks, Bangalore has cooperative banks, Bombay has cooperative banks,
yes,
Madras has cooperative banks. So what are they doing here? By the way, there is a huge amount of blue collar population which is there. There is huge amount of small and medium sized businesses which are there in this part of the world as well, right? Where do they bank? They don't go to a Yes Bank. Yes Bank doesn't entertain, or SBI or whomsoever, right? They go to a cooperative bank. Now for example, right, a lot of people when they talk to us and after that they start seeing cooperative banks. Because before that it's not there, it doesn't get registered. Yeah, okay, I have a cooperative bank just next to my block, right? So we talk to a lot of people and then they come back and say, I saw that after 2 kilometers there were cooperative banks which are there in Bangalore also, or Bombay also, or Gurgaon, for example, right? So there are cooperative banks who are in metro and tier 1 as well. And we have customers who are in metro and tier 1 as well. But they are providing services to a mid-scale, small-scale businesses, rich farmers, landlords. They are providing services to, like, for example, I give you a Gurgaon example, right? It has a cooperative bank which a single branch does 500 crores.
Wow.
All the farmers bank there, landlord owners bank there, and they are always full. I mean, if you go to their branch, it's always full during working time. So it's not like cooperative banks are just there in tier 2, tier 3 rural. They are very much there, present in metros. You just have to start looking.
Right. And that's a paradox of Indian cities also, right? We have rural in middle of urban, right?
Yeah.
So if you talk about any locality in Delhi, right? For example, you have Vasant Vihar, then you also have Vasant Gaon, and you have Vasant Kunj, then you have some village next to it.
No, more than that, right? Our cities also grew, right? But as I said, right, the first cooperative bank was established in Madras, right? So it's not like it's a phenomena which started from rural. It went also from metros to rural, wherever the agriculture economy was, wherever the credit needs were there at that point in time.
Right. But if we leave out the urban part, how do you see from the user perspective in terms of technology adoption? What do you think is different? Obviously, like you clarified in the beginning, you are not actually serving the bank, you are serving the end consumer, right? He is using the
App.
or she is using the app, right? So do you see any difference in technology adoption?
So, what has happened with as I said, right, in the starting, the smartphones have reached to the end user. Right now, we have 1 billion smartphone users. They are using the same Amazon like you and me. They are using the YouTube like you and me. They are using the entertainment, e-commerce, and social media. If you look at the numbers also between the two, it's the same, the penetration wise and the usage. In fact, YouTube usage and WhatsApp usage today is more in tier 2, tier 3 and rural than actually in urban also. So from that aspect, they are very similar. So they understand how to use technology, how to get benefit out of technology, and how to use the mobile phone. I mean, India actually leapfrogged straight away from paper to mobile phone. I mean, the online banking never kind of came in between, right? They have only seen mobile phone as a technology usage instrument. A lot of them have not seen a computer; they've seen mobile phone. So our adoption that ways is very quick. The thing which is different is that they don't still trust technology for financial transaction unless there is a person in between. Right? So when a bank says, this is my app, you can now do financial transactions on this. So he knows if there is something wrong which happens on this app, I can go to this person and ask for help. So the adoption is much faster in that way, when there is a trusted person for financial transaction, then let's say when there is no person, right? In the hindsight, he will use Google Pay, Phone Pay, Paytm, but a lot of them also had to put in field on street,
right,
to get that penetration even in tier 1 and tier 2.
Yeah.
Right. So
for merchant
onboarding, etc. Right? Yeah. Because merchants didn't otherwise trust whether I will get my money or not. Right? It will go away. I mean, the whole Paytm fiasco when happened, I think I don't remember the exact number. The majority of merchants from tier 2, tier 3 actually just went off Paytm because they suddenly thought that it's gone down and I will not get my money back. So that's that trust factor which is very, very important. So for us, what our learning has been that you have to make sure the bank staff is trained to the extent possible that he can explain the app as well as the transactions to the customer.
So you train them?
So we train the bank staff and the bank staff trains the customer.
So the training is virtual?
It is virtual. Typically it is virtual.
Okay.
But also when the bank goes live, we also go to the bank and make sure all the branch managers are there and get it done. But that is one of the factors which we have seen. The second thing which we have seen with these customers and the bank staff is that it takes a bit of time for them to actually start trusting and getting into it, right? It's a 6 to 8 month cycle.
Okay.
So they will first start with their top merchants. He will also start with 10% of his transactions on that. Then he will say, okay, yeah, this is working fine. But once they trust and once they have seen, then it's a hockey curve, right? For us. The third thing which helps us is a regulatory tailwind. So cooperatives that ways have now got a ministry after 75 years. There's a ministry of cooperatives, which is led by none other than Mr. Amit Shah.
Yeah.
Because he's been the big movement in Gujarat cooperatives. States. He was I think, held some positions also in state cooperative and all of that. So he understands the system very, very well. So he formed a separate ministry for cooperatives, and whose only and only agenda is to digitize this whole sector, bring more transparency, and solve all the issues regarding it. So, for example, Gujarat cooperative segment is so vibrant. Last year, they opened about 8 lakh new accounts, right? So, it's not like in our perception, we think the accounts are going down and all of that. They are opening new accounts. Bihar State Cooperative just 3 days back announced a 190 crore contract to digitize itself, right? It's not a small amount. So, a lot of this is happening in terms of that. Ministry is pushing them to adopt digital means, to bring in technology. They are in fact collected all the data of cooperative societies. So they have data of 8 lakh plus cooperative societies, which they have given on their website.
Correct.
You can go and check that out. So they are trying to digitize, and now they're trying to digitize the members of cooperatives also. So that what happens is, when it goes any DBT or the loans go, they have a complete visibility. Not only the farmer also has the complete visibility, the state cooperative also has it, district cooperative also has it, PAX also has it.
Sounds exciting. Anything how you want to conclude about your whole vision, different phases you are thinking about, anything you want to?
So see, currently the phase is very simple. First is we want to digitize the cooperative ecosystem and make sure that more and more cooperatives come and join us. And become digital, and so we can digitize the 35 crore Indians which are banking with cooperatives. That is the number one agenda for us right now. And then we basically then want to see how can we go to the next banking segment, and also see how can we provide the latest technology and the latest digital tools to banks and their customers to improve financial inclusion in India.
Got it. Wonderful. Any last thoughts for founders who are building their businesses? Maybe they are at very, very early stage. Maybe they're looking for funding. What some tips basis your last few years of experience?
I mean, in my experience, first tip I would say, don't listen to any advice. Because every journey is very different.
So go with your gut.
Go with your gut. Obviously, do research, but the
data plus instinct. Then.
Yeah, and most important is whomsoever you have an idea, right? A lot of people have an idea, and you are ready to take the plunge. Before that, just make sure you know your customer well. At least have. Because I have seen in my journey, a lot of founders think they have a great idea, but they have not observed the customer enough or realized the real pain points of the customer, and have not seen that or solved for that before taking the plunge. So that is very important. As I said, like, we sat in the banks and saw what happens and how the transactions happen. So a lot of that conversation, because of that learning, we could ease out the sales process as I was explaining to you, right? And we could also inbuild a lot of that in the product itself, right? So that is the only advice I have. Know your customer really, really well, and then build a product.
Right. So in conclusion, it's data plus instinct.
100%.
And customer discovery.
Yeah.
Okay, great. Thank you, Vishal. Thank you for coming out.